Hello, this is Steve Malone with Compass FX. I hope you're doing well today and you get some good trades. We had some pretty good trades today in the commodity-based currency pairs, especially the euro-based commodity pairs and the pound-based commodity pairs. Recently, we've seen the commodity currencies, the Australian dollar, the Canadian dollar, and the New Zealand dollar have quite a bit of weakness in the marketplace. And this is due in part to two things: unwinding of carry trades in the market, and seeing equity markets around the globe have these pretty high levels and not coming off these high levels. So with risk on in the equity markets, unwinding of carry trades in the foreign currency market, we've seen these commodity-based currencies weaken. So as the Aussie dollar is falling in value, the New Zealand dollar falling in value, and the Canadian dollar itself falling in value, we've seen these commodity-based currency pairs, especially the euro-based and pound-based currency pairs, have some extraordinary movement over the last number of weeks. Let's take a look today what took place, and I want you to be aware of 6 commodity-based currency pairs: the Euro Aussie, Euro CAD, Euro Kiwi, Pound Aussie, Pound CAD, and Pound Kiwi. Keep your eye on these pairs. They make some sizable movements day after day after day. Now, if volatility tightens back down, well, there's not going to be as much movement. But there again, when the volatility tightens down on these pairs, it's going to tighten down on most of the other pairs. These pairs have a tendency to make some sizable movement. So let's take a look at some of these using the Dots method. Now, for those of us trading with the Dots method, it was a great day. I can't say enough about the Dots method. The algorithm, the probability of the algorithm, sometimes it's just right on. It's just today at the start of the U.S. session, and for those of you not familiar with the Dots method, at the start of a session, what it does is it plots these levels. You have a buy entry level, 2 buy target levels, you have a buy stop loss level, and same thing on the sell side, you have those similar levels, and the white line represents, this white dash line represents the open. So from the open of the session, we're getting this movement up, and it just makes a beautiful move up to the buy target number 1 level and then on to the buy target number 2 level. And you can see if you had entered in, what the potential was in that trade. Look at the Euro CAD. The Euro CAD, this is one that I traded in the Dots trade room today. Made a move up, then it fell back over, did not get stopped out, turned, and if you had traded this from the entry up, a potential of another 40 pips. Let's take a look at the Euro Kiwi. It made an extraordinary move beyond the buy target number 2 level, sat on it for a while. There's some folks in my trade room that just picked this up, had a nice trade in that. Look at the Pound Aussie, just way beyond the buy target number 2 level. And for those of y'all who have the Dots method, I'm going to share with you a quick technique to help you determine the targets when it goes beyond the buy target number 2. Look at the Pound CAD. Another massive move today to the upside. This is one that I did trade in the Dots trade room. It took about 40 pips out of this move to the upside today. And then the Pound Kiwi, strong move up as well, going again beyond the buy target number 2. Just think about this. Had you gotten in on this trade at the buy entry level and held on to the buy target number 2, there's 63 pips. If you've been looking at this, there's a lot of pips here today. Like 60 pips there, 30 pips. If you just looked at the buy target number 2, there's 90 pips, another 50 pips, 140 here, another 40, so we're up 180 pips. The Euro CAD, another 40 pips, so it's 220 pips so far, and the Euro Aussie up about 50 pips. There's about 270 pips today just trading this from the buy entry up to the buy target number 2. Now let's talk about how you can determine a potential target when it goes beyond the buy target number 2. I'm going to go out to the hourly chart, and I've got a line showing yesterday's low. I'm going to put a line showing yesterday's high. And I'm simply going to take my fib retracement tool that I've added some extension levels, run it in reverse in MetaTrader 4, and there are 3 levels that I typically look for the market to go to: the 127.2, the 141.4, and the 1618. And a lot of people know about this level, but not too many people know about these. But these are high probable targets that are used by algorithms on Wall Street. And sure enough, the market moves right up to that 127.2, gets within a few pips of hitting the 141 target. Take a look at the pound CAD, similar situation. There's the low, here's the high, and run that fib from the high to the low. We can see here just within a pip or so of hitting the 127.2. And in the pound Kiwi, again the low of yesterday, the high of yesterday, run the fibs, and look what the market did. Pushed right through the 127.2 and the 141 and pushed up to that 1618. Did not quite reach the 200, but these are again are the levels that you're looking for. And it's kind of interesting that the DOTS algorithm and the fib extension are the same levels here, but the DOTS algorithm doesn't have Fibonacci levels within it. It's just interesting that price action and these fibs work themselves out at the same level. So again, if you're not familiar with the DOTS method, at the start of every session it lays out these levels for you. You have the Australian session, the Tokyo session, Midnight New York, European Open, London Open, and the US Open. Each one of these sessions you can select from the indicator and it plots these levels on your chart automatically. To learn more about the DOTS method, go over to www.compassfx.com/DOTS. Well, this is Dean Malone with Compass FX. I hope you had a good day like many of us had today in the DOTS trade room. Y'all make it a great day. Get some good trades. We'll talk to you next time. Bye-bye.